Hi, I'm Asif Farouk of Finextra, and we're here at Cybos 2014 in Boston, and I'm joined today by Jon Matonis of the Bitcoin Foundation. So Jon, thank you for joining me.
No problem, glad to be here.
So let's start with an article you've recently published, and it was about have banks squandered the opportunity with Bitcoin. Now my question is, do you think the opportunity is still there for banks to use Bitcoin?
First of all, yeah, the opportunity is definitely still there. The word innovate and banking should go together, and a lot of people don't think it does right now. There's reasons for that, but if you look back to what I mentioned early on in that article, is that the banks actually were innovators. The banks came up with the concept of the credit card, which started in Bank of America, later broadened out to become it was Bank AmeriCard, and then it became the Visa system that we know now. So banks were definitely innovative and innovators in the payment space. What's happened over the last 40, 50 years, most recently, I would say it's the latter part of that time frame, is that you have more of the attorneys involved now at banks because of the compliance and because of the regulations around anti-money laundering. What that means is that you have almost 10 attorneys for every one bank product manager. So you can see in that environment why it's difficult to push innovation through. Now, when it comes to Bitcoin though, I think that the banks still have an opportunity because it's definitely early on for Bitcoin. Banks own the trust space, for better or worse. You know, people trust banks to hold their financial assets. So there's an opportunity right away for banks to be in the wallet business, the safekeeping business for digital currencies. And since banks have also been in the trading business for foreign currency conversion, they have trading desks. There's no reason that a bank cannot manage Bitcoin as any other currency in their currency trading portfolio. And banks should start thinking of it as just managing any other currency. I mean, those are just two of the use cases for banks to get into Bitcoin. There's other ones as well if you want to expand it out, because I think in the merchant processing side, just like there's merchant processors now in financial services that assist merchants in getting up to speed with accepting credit cards, there's an opportunity for banks to be in the merchant processing space for accepting Bitcoin as well. Once they have the infrastructure on the trading side, it's not that far of a leap for the banks to then get into the payment space by signing up their merchants who are potentially already their clients. And then lastly, I would say another attractive opportunity for banks would be in the escrow business. When you're dealing with something like digital currency, especially Bitcoin, which acts as a digital bearer certificate almost, you don't always know the merchant that you're dealing with. You may not know the reputation of them, and you don't want to give them irreversible payments if you can't get it back. So escrowing payments and being that kind of middleman for those transactions where it's necessary, it would be another great role for banks. And I've been talking about this for several years now.
Great. Okay. Before our conversation today, you mentioned something about jurisdictional arbitrage.
Yes.
How does the Bitcoin Foundation deal with that?
Right now, the foundation is actively responding to government inquiries and regulator inquiries for education. We do educational briefings. We're starting to do more around the world now. We've done 30 plus in the last year. And what we've noticed is we've noticed a pickup in the requests that are coming from the smaller jurisdictions. Places like Luxembourg, Isle of Man, Gibraltar, not the places that you would typically associate with. A lot of people don't know, don't have experience dealing in those jurisdictions. But the one thing that those jurisdictions offer is the nimbleness and the speed to market for new technology. You can rapidly work your way through the Q&A session with the government policymakers, with the regulators. If a Bitcoin business needs them along the way, they can easily pick up the phone. They can talk to somebody in the government. So the bureaucracy is less. The responsiveness is there for those jurisdictions, and more importantly, they actually have a desire to get into the business. Some of these countries are maintaining the posture that they want to become a Bitcoin financial hub, and that's their attitude and their business reason for going into it. So with jurisdictional arbitrage, what you actually see is you start seeing countries that are competing for Bitcoin businesses coming to their shores, which overall is a very good thing for Bitcoin adoption. And the larger jurisdictions, such as the U.S., that have tended to make it less attractive for Bitcoin businesses to be based in the U.S., that kind of posture only benefits the other jurisdictions that are attempting to bring Bitcoin business to their jurisdiction. And I see that trend continuing. Right now, less than 2% of Bitcoin trading volume actually occurs in the United States. Less than 2%. With the amount of Bitcoin enthusiasm and Bitcoin nodes and Bitcoin VC investment in the United States, you would think that number would be a lot larger.